Good morning, everyone. Hopefully you can see the presentation on your screen. I'm Peter McGrath, and with me I have Matthew Beale, and we're going to run through the half-year results presentation. Underlying EBITDA was 1.2 million. That compared with 1.5 in last half. But in light of COVID impact in the first half, we're really happy with that result to come out with an underlying EBITDA of 1.2 million. Total revenue was 9.1. That was 0.6 million lower than the previous period. But that was really due predominantly to impacts related to COVID-19, where we had delays with customers in terms of decision making. And there was probably a period of about 3 or 4 months where the SME and corporate sector were impacted particularly. We did get some one-offs from some customers, which has obviously helped the results, so we're very happy with that. Our cash flow, operating cash flow underlying was 0.7 million, and so we're happy with that result as well. That was before some prior year expenses and before business acquisition and integration costs related to an acquisition. And we have a strong balance sheet with cash at bank of 5.4 million at 31 December and no debt. In terms of key business highlights, I'll just go through those now. Financial. So as I've just outlined, the underlying EBITDA 1.2 million for the first half. And Next Telecom business, which is consolidated from 1 February. We completed the acquisition in January. The half-year results unaudited are tracking well, with revenue of 7.7 and an underlying EBITDA of 0.8 million. Despite the challenges that the COVID period presented, we went through that period with negligible level of bad and doubtful debts. We did put in place some payment plans with a small number of customers, less than 6 or so, but that's all been tracking well. And the churn levels have been at around the normal level. So we did lose some customers, and some customers unfortunately were impacted by COVID, and others put through some restructuring. And as a result, some of those customers decided they didn't need certain services with us. Nonetheless, we also won some new customers and some great customers through that period, which I'll cover in a moment. We also undertook a 6.5 million equity capital raising, which was completed in late 2020, early January. In terms of customers and sales, as I mentioned, many businesses deferred decisions during that period, and really what we saw, particularly around the middle of the year into the first quarter, we saw companies that were just trying to figure out how that they could continue operating when they couldn't have staff at the office. That presented some opportunities as well. In other cases, we saw some businesses reduce services. Despite these challenges, we saw some strong sales wins in the first half, which we were really delighted with. So particularly in our wholesale area, some large wholesale customers coming on board, and we had roughly 6 multinational corporates taking unified comms services internationally, as well as a significant number of SME and smaller businesses that continued to order and take services. We saw a very good level of renewals within our business, and our account management team did very well there. And then from about November 21, we've seen a really good uptick in terms of inquiries and customers coming on board with additional services. And as of today, we have a very healthy sales pipeline with both our wholesale and partners and our corporate direct business. I'll come to that in a few minutes. In terms of strategic or corporate level initiatives, we changed the group name to CommsGroup Limited from November 2020. We completed a successful acquisition of Next Telecom, and they're consolidated from 1 February. We now trade under CommsChoice and Next Telecom domestically, as well as CommsGroup internationally, and we're continuing to work on M&A opportunities as they arise. Next Telecom, we're very pleased with the trading performance of Next Telecom year to date. I've just mentioned their half-year results, which were good. And in terms of Next Telecom and how they go to market and their key attributes, they are a telco service provider that was established in 2008, for servicing the medium-sized corporate business markets in Australia, with offices in Sydney. But they operate up the eastern seaboard and they have a very good dealer network, and they've refined that over a period of time. They offer a range of telco products, but they're particularly strong in that corporate mid-market where they're selling a fibre optic service and then providing services over the top of that, increasingly more complex services like security services, and they're also providing managed IT services today. Really happy that the management team have come on board as part of the wider CommsGroup, and we've got two leaders in that business who are very competent and experienced executives, and they're running that business. For the full year, we're forecasting revenue of 15.5 and pro forma annualised EBITDA of 1.5 million plus. That really is a transformational acquisition in terms of our business. It's going to it will roughly double our revenue. Revenue will be over 30 million, and EBITDA, annualised pro forma EBITDA of over 4 million with synergies. But importantly, it gives us another channel to market. They're very strong in direct sales, and we want to look to expand that, their direct sales base, and they have a very strong dealer network as well. The CommsChoice business, more so focused on indirect, very big with wholesale customers, partners, and also into the SME area, and then corporately via an indirect channel, typically via the internet and the international network, whereas Next Telecom are more focused domestically and particularly up the eastern seaboard. So it's a really good complementary fit. A large portion of the acquisition was issued in CommsGroup shares, and we believe this gives us a great opportunity to lead consolidation within the domestic market. We are working on the synergies and the integration, and we believe that there's going to be some very good cost synergies that will come out of the acquisition. In terms of we covered that one. In terms of financials, I'm now just going to turn to Matthew.
Thanks, Peter. As already stated, the revenues for the 6 months were 9.1 million. And in line with that fall in revenue, the cost of sales are down at 4.6, but we've generated a gross profit of 4.5 million, which is actually an improved margin, I suppose, through sort of strict cost controls and margin management. Our OPEX is up slightly by 200,000, which reflects a number of new sales positions, as well as some new sales and marketing campaigns done through the period, to generate an underlying EBITDA of 1.2 million, which is slightly down against the prior period, but that was before the business acquisition and integration costs of about 400,000, which primarily relates to the Next Telecom acquisition, and then share-based payments of just under 100,000, giving us an EBITDA of 800,000. A net profit after tax of 200,000 is obviously a lot less than the prior year, but the prior year we recognised the benefit from carried forward tax losses of about 900,000. So that benefit resulted in a net benefit for the prior year of 500,000 relative to an expense this year of 200,000. So we'll just move to the balance sheet. We've got net assets of 17.8 million relative to the prior year 9.4. That obviously includes a significant improvement in the working capital, as well as the cash position, with cash on hand of 5.4 million. In addition to the net assets, as stated, we've also got access to about 1 million in undrawn lease and working capital facilities. As well, we've also got, which isn't reflected in the net assets, we've got carried forward tax losses that we can use of 2.5 million. So then moving on to the cash flow, we generated during the period, I suppose from just the underlying operations, we generated $700,000 of cash during the period, but that after deducting approximately 300,000 in payments for prior year expenses, that was 400,000, which has been used to pay for restructuring costs of 200,000 that were also recognised in the prior period, as well as the payment of the business acquisition and integration expenses of 200,000. So then we've also, during the period up to 31st of December, we've raised 3.5 million in new equity, which is net of the raising costs. And then just other financing activities of 200,000, which were mostly lease payments for properties, and then other investing activities, which is really capex of 300,000, to give us net cash inflows for that period of 3 million.
Okay, thanks, Matthew. Capital structure shown there. Total shares on issue, and this is post the next Telecom acquisition of 340 million. At a share price of 8.4 cents, that gives a market cap of just on 29 million. With cash at bank 31 January 6.2, we end up with an enterprise value of 22 million, and we have 23 million performance rights on issue, and they're exercisable from 12.5 cents to 30 cents. Okay, I'll just go through a bit of a business update. So, you know, we have a unique attribute, I think, in terms of, you know, an Australian telco. We're a leader in the Microsoft Teams calling for global businesses. We have an extensive international network. We have mentioned to investors previously that we expanded into China, Japan, Philippines and Hong Kong, as well as being in other parts of the world. We still are, we believe, the only provider of Microsoft Teams calling in China. We have circa probably 6 to 10 customers who, as part of their Asia Pacific rollout and global rollout, want services in China, so that's been really encouraging. And of more recent time, within the last few weeks, we've expanded into some other underserved markets, including India, Indonesia and South Africa. And we recently achieved Microsoft Gold Partner status for communication, so we're working closely with Microsoft throughout the region on opportunities as well. In terms of our unified communications offering, where we're pushing Microsoft Teams calling, and in particular the integration into telephony networks around the world, we've also added a number of key additional products to that offering, and we believe as a result we have one of the leading overall offerings in the marketplace. So this is in addition to Microsoft Teams calling. So if you're a corporate, mid-market or even a small business, you can take your Microsoft Teams calling, where Teams can be used for your video as well as your telephony, and the integration into the local telephone networks in various different countries. We can provide that base service. We also offer now contact center for Microsoft Teams, and this is native within Microsoft Teams. So staff within your contact center can be using this and using Teams to provide a contact center service. We also offer call recording for Microsoft Teams. We partnered with a global leader in that space. It's native cloud-based call recording for Microsoft Teams, and importantly, it's PCI compliant. And also we've offered call analytics. So when you're using Teams calling, particular contact center applications, we can then provide value-added, software that measures call sentiment, artificial intelligence-driven speech analytics, and so management can use that to improve the way that they service their customers. So we're really delighted with those add-ons that we offer Microsoft Teams. Just a bit on strategy and outlook now. So there's 3 key areas that we're targeting growth through at a macro level for the corporate mid-market sector. So we're looking to expand by adding additional products and services, and also by key acquisitions to add capabilities and build scale, and targeting businesses with typically 50 to 1,000 seats. Now, we have been successful in more recent time winning deals with larger customers, and particularly in the Asia Pacific region, which we're really happy with as well. The second core strategy is expansion into Asia, rest of the world. So we built really strong momentum there. I mentioned earlier that we've signed, roughly 6 MNCs in the first half. That momentum has continued into the second half. We have a significant pipeline of opportunities now with very large global players or global customers, and we're looking at providing services for them. So we're really excited about that as well. And then our third key strategy is niche, and that includes potential expansions into other parts of Australia, and typically via key acquisitions. And as an example, Next Telecom have got a great dealer network up the eastern seaboard. We obviously want to grow that and reinforce that. We're looking at opportunities into the likes of other capital cities, and we're also looking at regional opportunities there with our niche strategies. One other thing I would talk about in terms of strategy is, as we grow and we add other businesses, we want to make sure that we can leverage some core competencies. We don't just want a bunch of disparate businesses, and so what's important is to keep a watchful eye on how you're going to do integration and you're going to extract synergies. So CommsGroup does have strong capabilities with systems and products, and will provide key capabilities for the combined group. We're a leader in IP telephony, and as a result, we have great products, but we also have very low cost base there. So we're currently working on enhancing these capabilities to provide advanced online ordering, services management and support, as well as automation of key processes. And these are systems and capabilities that will be extended across the group. A 4-pillar growth strategy, which we've touched on before, and this really encapsulates those 3 areas we talked about before. So domestically, looking at growing into the SME and corporate sector, particularly the corporate mid-market, and also the niche markets, including regional. Wholesale for us is a big segment. We're seeing good growth into the wholesale segment, and this is where we're selling services to contact centre providers, to IT companies and managed service providers, and also to global and regional telcos. And so we're working on a number of key distribution deals in that space, and then overseas primarily corporate multinationals, but also via these partners I just mentioned, with a key focus on Asia Pacific, and then looking at strategic acquisitions into the SME and the corporate sector, looking at both capabilities as well as increasing our distribution reach. In terms of outlook, we're pleased with the results achieved so far this year, in light of what was a challenging period where for 3 or 4 months the SME sector was particularly impacted. But we've come through that now and really came through with very little in the way of bad or doubtful debts through that period. Into the second half, we expect to see some steady growth, and we're hopeful of closing out some sizable unified communications and some wholesale deals. Our guidance is that we expect to meet or exceed 3 million of underlying EBITDA, and that would include 5 months trading from Next Telecom. And also the group, if we look at it, the group including Next Telecom, we'll have annualised revenues of over 30 million and annualised pro forma EBITDA of 4 million plus for synergies. We're doing quite a lot of work, as I mentioned earlier, on the synergies and having the right integration plans in place to extract those synergies. We are continuing to look at M&A opportunities as they arise, and we're hopeful that we'll have some M&A announcements over the next 6 months. So that's all I wanted to cover at this stage, and we're just going to now open up for any questions that people may have. Yeah, we've got one question that's come through, and talking about Asia Pacific and how do you expect to achieve growth into the Asia Pacific region. Now I mentioned earlier on that we have today been successful or to date been very successful in winning business into the Asia Pacific region. We have a very good network, particularly with our Microsoft Teams calling capabilities. And today in Asia, we can connect customers in almost every key country there in Asia, and we're continuing to add to the countries where it might have been a little bit difficult, Jakarta, Indonesia being an example. So what we can do today for organisations, multinational corporations, is pretty well provide them a unified communication solution across many countries in Asia. We can give them a single bill, single account manager, and we can very quickly implement those services in a number of days. So we're attacking this opportunity through a number of channels. We have some partners who we're bringing on board who can sell across the international customer base. We field direct inquiries internationally, and we service those organisations in terms of consultancy and advice, and then bringing them across the line. So that's with our corporate direct approach. And then we have a number of large partners who are bringing opportunities to us today. We do have a license and a subsidiary in Singapore, and when we have the opportunity in Singapore, we'll be looking to put some people on the ground once we're through this COVID period. But today we're finding a good level of opportunities, and the pipeline's actually building. So we're taking it a step by step, but we're seeing a good level of growth and opportunities coming into the Asia Pacific network. All right, well, look, if there's no further questions, we'll leave it at that, and thank you very much for your time, and thank you for your attendance.